Okay, what we want to do now is go over any takeaways from session 2, any things that you found were significant or important, any open-ended questions, any questions that we didn't address that you might have a question on. Please don't be shy about asking any type of question, because if you have that question, there are probably 2 or 3, 4 other people that have that same question. So the annotation bar is open, so please put a text box in there and type any takeaways that you had on Wednesday's session 2. There we go. Excellent. Okay, how to handle exceptions. Pool record layout. E-severity on the exception download needs to be worked immediately. Good. These are good. All right, let's have about 40 others. No, just kidding. Okay, there we go. RFS exceptions and the severity levels, loan and pool records are monthly. Excellent. We went over exceptions and order of addressing the exceptions. Very good. Thank you, Marissa, for your comment. We try to make this a little interactive. All right, any other takeaways? Or questions? All right, we'll wrap this up. Sarah, if you could capture these prior to us moving to the next slide. Excellent. Okay, thank you. So the topics that we did cover yesterday were in sections 5, 6, and 7. We talked about the monthly report of pool and loan data. A lot of you commented on that. We went over the P, the L, the S, and the V records. About editing, the calculations performed by RFS in summarization. And we talked about which fields the issuers were reported for reporting and editing for single-family issuers, as you are. In the exception feedback section, we talked about the messages and the alerts, the summarization alerts, navigation in the screens themselves, and at both the pool, the loan, and the liquidation, how to view those in exception feedback, and retrieving the downloads, very important. And then we talked about the overview of the workflow, the timing, second business day through the 4th, which records were required to be reported, and talking about corrections, and the FAs, the functional acknowledgments. So this session, Christy will talk about what we're covering today.
Thank you, Steve. Today we will be focusing on additional reporting requirements and cash and reconciliations. We will get started with additional reporting requirements. In this module, we will review monthly and quarterly reporting requirements and explain the timeline for additional reporting requirements. The monthly reporting certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. Loan matching and suspense should be worked monthly. 11/7/14 Remittance Advice for Ginnie Mae 1 certificates should be reported no later than 7 p.m. Eastern Time on the 8th business day. Only a limited number of issuers actually report Ginnie Mae 1 11/7/14 information. CAVs and WithIt are reported quarterly. New pool data quality should be addressed monthly if you have any. And Sarah, if we could turn on the annotation tool, please. If you could place a sticker on any of these reporting requirements that you are familiar with, please. Oh, perfect. Wonderful. I love all all of the stickers. Those are great. Wonderful. Thank you so much. The monthly reporting certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. To navigate to this screen, hover over RFS, click Exception Feedback, then click the Summary tab. The monthly certification blue link can be found in the lower right-hand corner and is also highlighted with the red box on this slide. Would you please raise your hand if this screen looks familiar? Thank you, Audrey and Emily. Thank you, everyone. That is wonderful. Sarah, if you could please clear the hands. If my name on the HUD 11702 form is Christy N. Christensen and my name on the token form is Christy Christensen, I would not be able to certify as my names do not match on both forms. In order to complete the monthly certification as an issuer, you must be a signer on the active HUD 11702 form in MAMS. Also, the name on the HUD 11702 and the RSA Secure Token form must match exactly. Like in the example before, my name did not match because one of them had my middle initial. For a subservicer, the user must be a signer on the issuer's HUD 11702 form and must also have an active HUD 11707 form in MAMS. A quick story. A few months ago, an issuer missed the 14th business day monthly certification deadline because the only one person that had access to complete the monthly certification was out on an unexpected medical leave. Therefore, a best practice would be to have multiple backups with RSA tokens for the monthly certification process. I will now turn it over to Cal.
Thank you, Christy. Good morning, everyone. Happy Friday. I will be talking about Ginnie Mae loan matching. What is it? RFS has an automated process that we run monthly, and it electronically matches issuer-reported data to the loan data that the agency reports to us. We actually now run 3 matches. One was just added to our production schedule at the end of the month. Some examples of the agency data that we get is the FHA Single Family Insurance System A43 database. We receive data from the Computerized Homes Underwriting Management System. We receive VA guarantee data, RD, USDA, RHS endorsement data, we call it RD data now, and Currently, we do not receive any PIH data, so there is no matching at this time, but we are in the process of working with PIH to receive that data. Ginnie Mae loan matching, the match criteria, issue reported loan data. We get it every month. We get the data from the agency files every month. We have a 2-string match on case number and OPB. If you have FHA loans streamlined from starting January 1, 2003, we also have an additional 3 fields that we match on, and that is interest rate, maturity date, and zip code. The zip code we actually only match on the first 3 digits. And we do ask that issuers resolve all non-matches. A question you can write in the chat or speak. How do you resolve your non-matches if anybody is working on those? And while you're turning your mics on or typing in the chat, I'm hoping everybody got to see the strawberry moon last night. It was beautiful. It was semi-supermoon, so I had a very nice view of it over the Chesapeake Bay. And then again, is anybody working to resolve their non-matching loans? Any chat? I see a hand raised, Eileen. So you do work on them. Do you have an opportunity to pop something in the chat, what you do or how you do it? Okay, Deb doesn't have any. Woohoo! Like that. Oh, no problem, Eileen. That's no problem. It's all good. So, all right. We will keep moving forward. So to work your non-matching loans, you would go into the Matching and Suspense module in the RFS system. You would select Matching and Suspense, which is highlighted in the red box. Does anyone raise your hand if you have subservicers? And do they do your non-matching research? Okay, thank you, Adam. Okay, thank you, Suzanne. You have one, but they do not. Nicole, you do your own? Thank you for sharing. Deb, or Dawn, excuse me, thank you. You send your reports to your insurance team. Very good. So also in the Matching and Suspense module, there is a user guide. As you can see, it's the very last tab on the screen. Also listed there are the downloads that are available to issuers for work to resolve your non-matches. The insurance matching download file, they're available after the 5th business day, and then updates are available to view and download after the 10th business day. And just so you know that the non-matching downloads are dynamic. So if you make corrections and we run our second match, those loans that have been corrected will drop off your download. For the MAT exceptions, they are static for the month and they will not clear until the next reporting period. You may reference the Matching and Suspense User Guide, section 7.2, loans with a match code of MC or NC. First, contact the agency and confirm that the insurance is still active for the current reporting period, and then verify that OPB matches the note. A lot of times issuers will contact us and say, oh, my loan's insured, here's the MIC. Well, or an LNG or an LGC. So what that means is those loans were insured at one point in time. What we're trying to confirm is that the loan is still actively insured. For non-matching loans that are aged, refer to APM 18-01, mandatory buyout of loans missing the requisite federal agency insurance or guarantee. You may contact the Ginnie Mae loan buyout team at ginniemaybuyout@hud.gov regarding the mandatory buyout approval process. If a loan had a curtailment, contact the Ginnie Mae help at Deloitte.com. That's me. And refer to the Mass User Guide Section 9. It provides information on how you resolve these loans that have curtailments. If the loan has been modified, confirm that you are reporting the OPB from the note, and the loan purpose code is reported as a 3 HAMP or 4 non-HAMP in the various record. Again, you may refer to the MBS Guide, Appendix 6-19, Record Layout, Structure, search on various loan record, and I actually believe it's Field 10 that references the OPB, which indicates that you report the OPB from the note. I have Sharmalee is hearing feedback. Is anyone else? Okay. Maybe Ryan can private message you and help you out. Insurance matching download file, the match codes. So an MA match code means that you matched on case number and OPB, the 2-string match. For streamlined FHA loans, we also match on interest rate, zip code, and maturity date. If you see an MC match status code, that means that we could only match on the case number that you're reporting. Please again verify that the OPB matches the note and that the loan is actively insured. If you see an NC match status code on your download file, that means we couldn't even find the case number in the agency data. We take your case number and then we compare it to the agency file and we look for a match, and that tells us that the loan is actually in the file and it's ready to be processed. If we can't find that case number, to us, it appears to be an uninsured loan. And Ginnie Mae does not like to have any uninsured loans in their pools as it presents risk to the investors. Okay, so this is, I referenced earlier that the match codes in the downloads, the MA, MC, NC, they're dynamic, and if you make corrections, they could drop off of your download report. For the exceptions, the MAT 001 through 005, they are static. So the NC equals a MAT 001. Again, we could not find a case number matching what you are reporting. The MC will be a MAT 002. Again, this has to be, it's an OPB issue. There could be curtailments applied. Again, you can contact the Ginnie Mae help at Deloitte.com for further instruction. If it's MA, NI, this applies only to FHA streamlined loans. This means that either your interest rate, your maturity date, or the first 3 digits of your zip code are not matching to what the agency is reporting. If you see a MAT 003, please confirm the interest rate that you're reporting matches the note. You see a MAT 005, confirm that the maturity date is matching what is on the note. MAT 004, means your zip code, first 3 digits, are not matching to what the agency is reporting. Now for MAT 003 and MAT 005, there is an exception for these if your loan is modified and you're reporting it accurately as a loan purpose 3 or a loan purpose 4, HAMP or non-HAMP. These will be skipped during matching because we know that the loan terms have been adjusted. So for loans, we do have a manual process where we know your loans are just never going to match, and they will be on your download. They'll be in your exceptions until we work with you to manually hard code the loans. Loans that qualify for manual hard coding are loans with principal reductions, modified loans with principal reductions, VA vet, non-vet joint loans, Texas Land Board loans, USDA loans with multiple borrowers, and USDA loans when the primary borrower is deceased. Now we do have a process. You upload documentation securely into the reporting and feedback system, but if you see that little note at the bottom, we are never permitted to receive documentation in an email, secure email. All evidence must be securely uploaded because it will contain borrower's personally identifiable information, PII. This is, raise your hand, please, if you receive an e-notification indicating that you have suspended records. And what would you do if you did receive a notification? No one has suspended records? Thank you, Sabrina. Confirm correct case number and return to Ginnie Mae. Yes, and return to the Ginnie Mae inbox. Yes, very good. Okay, well, on the screen is an example of the e-notification. And what it basically does, you only receive this e-notification if you have suspended records. And if you do, we give you a little guidance inside the e-notification. And we ask that you return this file no later than 9 a.m. Eastern Time on the second to last business day. Terminated loan matching. We currently receive data from FHA and USDA RD that contains loans where the insurance has been terminated. If we run a matching process and if the case number you're submitting to us has been marked terminated by the agency, you will receive an e-notification letting you know that you have terminated loans. And what you do is you go in, you confirm that the loan, if it was still actively insured, contact the agency and ask them to please reinstate the loan as actively insured. A lot of times I have seen, and this is also information from issuers, they'll email me or call me and say, no, the loan's active. Particularly FHA may have set a wrong termination code. And they go back in and then they unterminate it. The following month we get a file and it'll show back up in the active file and it will be reinstated as active and it will drop off your report. The matching and suspense timeline schedule, again, download your files after the 5th business day, make your corrections. We run a matching process again on the 10th business day, pull your download on the 11th business day to see what's remaining. Again, same thing with the terminated. Pull those down to see what's out there, contact the agencies, follow up, and try to get the insurance reinstated. your Suspense download, you pull that on the 6th business day and the 10th business day, and you may process those files. Aged monthly matching, aged terminated matching, again, pull on the 5th and 10th business days. Your various Suspense, you will receive your e-note around the 7th business day, and again, there will be guidance in that on how to follow up. And then at the last one, monitoring letters. Ginnie Mae is, their monitoring team is reaching out to issuers individually to work with them to have the aged matching and the aged terminated loans cured, fixed, and removed from your downloads. And I believe some of you may or may not have received letters from Paul St. Laurent and the monitoring team. With that, I will turn it over to Steve.
Gail, could I just, this is John Kozak, I just wanted to maybe just a brief commercial here. I just wanted to underscore the importance of the matching, what Gail has been articulating, because matching's really important to Ginnie Mae, because Ginnie Mae's statute requires that only government insured or guaranteed loans be in Ginnie Mae pools. So if we're not able to find your loan in the agency database or match it, then we have to assume it's not insured. And if these loans go for a longer period of time, say more than 6 months, after it's in the pool and we can't find it, then, we start contacting you about that. So please make sure that what you're reporting to us is consistent or matches the agency, insurance, or guarantee database. That way we know the loan is insured. Thanks.
Thanks, John. And I apologize. I said I was going to turn it over to Steve, but I'm actually turning it over to Christy. Thank you.
That's okay. Thank you, Gail, and thank you, John, for all of that great information. So to move on to the 11.7.14 Remittance Advice, to navigate to this screen, you would hover over RFS, click Pull Accounting Single Family, then click on the Remittance Advice tab. To report the 11.7.14 certificate, you would select your issuer ID, enter the pool ID, enter the certificate number, and also select the current reporting period and click Go. Please raise your hand if you submit 11.7.14 Remittance Advice information. And then also, once you click Go, the Remittance Advice screen will display, and you would fill out that screen and click the Save button at the bottom. And I'm not seeing any hands. Once all of your 11.7.14 information is reported, please click on the monthly remittance download in the dark blue bar to export all of the information that you have reported. You would need to save this file for audit purposes. I will now turn it back over to Steve. And I'm also hearing some background noise, Ryan.
Thanks, Christy. By the way, I have seen some hands raised, so if you've been raising your hands, do know that we've seen them. Very good. Now, the next few topics that we're going to talk about are topics that are for quarterly reporting. The first one we have here is the Service Member Civil Relief Act reporting, SCRA. SERA reporting is detailed there in Chapter 34-3 of the Ginnie Mae Guide. And you can see in the bullets there, as you're reading as I'm presenting, that this is for eligibility and reimbursement for military personnel, and this reporting to Ginnie Mae is for the accounting and the reimbursement for those military personnel that are qualified. This is a quarterly process, and we have a module within the reporting and feedback system that allows you to report that. Once logged into the GMAP, you click on RFS, and then the SCRA module is available to you. Now, could you raise your hand if you report SCRA data to RFS on a monthly or on a quarterly basis? Any reporting? There we go. We have a few. Okay, thank you. Great. There's a comment. I review for it, but we don't have any. Ah, got it. Thank you. Once in the module in the portal, you can see there are an eligibility section for the eligibility of loans and a reimbursement processing section for the reimbursement. And you can see in the box at the top in red is the user guide for SERA. Each of the modules within RFS has a user guide that you're able to download and get information about the correct reporting procedures for that module. Okay. I will turn it over to Gail to discuss the next quarterly process, CAVS.
Thank you, Steve. So I put a little chat in to everyone if you report quarterly verifications. And that's what I'm going to speak about. It's the custodial account verification. And this, if you want a reference, you may reference the MBS Guide, Chapter 16, Section 8, Custodial Institution Ratings. Raise your hands if you have a reminder for this in your electronic calendar. Issuers must submit a verification between the 6th and 15th business day of March, June, September, and December, stating funds and custodian meets the requirements specified above. And I'm going to go back to the hand raising. I see a few. Andrea, you raise your hand a lot. You are a busy girl. Courtney, thank you. I saw a few other hands raised. Thank you for sharing. This data may be reported online data entry or in file upload, and I believe to this day, since we put this process in place, I still do not believe we've received anything uploaded into RFS, which is fine. I personally think it's easier to do it online, but it's a personal preference. There must be a separate certification for each fund custodian pursuant to the Master Agreement for Servicers Principal and Interest Custodial Account, HUD Form 11709. Again, you would go into the RFS system. You would select in your drop-down menu, Pool Accounting, Single Family, and then inside that you will see a gray tab, which is highlighted in red or boxed in red, and it says Quarterly Verification. The next screen, it will take you to the quarterly verification screen, and it gives you great detail on how to update and enter your quarterly verification data. Does anybody have any questions, comments? Okay. Just to let you know, we did just wrap up CABS in June, and we had no missing certifications. So that was very good. And I will turn it back over to Steve. Thank you.
Thanks, Gil. All right, the next quarterly process that we're going to talk about is the WithIt, Widely Held Fixed Investment Trust Reporting. This is a module that you report through the portal, and there's a selection there for WithIt, or you can upload your information through the file upload piece that we talked about on one of the previous days. There is an FAQ section on the Ginnie Mae website for the WithIt, and the questions are very good, very thorough for that. The schedule for WithIt is they are submitted by the 10th calendar day of the month, with corrections due on the 15th calendar day of the month. Make sure that you know that these are calendar days and not business days, so you don't miss out on the reporting deadlines. Now in this box that we have at the top here, if you could, actually first, Sarah, if you could turn on the annotation tool and put a check mark if you believe that WithIt reporting is mandatory, and put an X in this box if you think that it is not mandatory. Okay. Very good. All right, thank you for voting. The WithIt tax the WithIt tax reporting is not mandatory. Ginnie Mae provides a facility for reporting your OID and your MDF data, and if you see in the bottom there, those are the deadline, the monthly deadline for each quarter. The Appendix VI 18 is where you find out information about WithIt, the form itself, and the instructions for reporting. As I mentioned, this is the module in RFS where you would find WithIt, how to get to it. Right next to it is the file upload that I mentioned, but if you're trying to get to the online, you go RFS to WithIt. All right. Once you get in the module, you can see there is information for the issuer, some reports, and then the about and the user guide. But the information there under issuer is where you would do your individual reporting for WithIt. Okay, next I will turn this over to Christy to discuss the issuer's financial.
Thank you, Steve. An important task for issuers to perform annually is to upload your company's annual financial documents. This is in accordance with MBS Guide Chapter 3. These must be uploaded into RFS, File Upload, Independent Public Accountant, or IPA. These documents are due within 90 days of the issuer's fiscal year end. Appendix 6-20 provides step-by-step instructions. All documents must be in PDF format with specific file names. Submission dates of annual documents depends on your fiscal year end. Do you know the date of your company's fiscal year end? If so, please give me a thumbs up. If you do not know, that would be a great takeaway to ensure that this deadline is met. Thank you, Elaine, and Leanne, and Suzanne, and Cheryl. Wonderful. Thank you so much for giving me a thumbs up. Sarah, if you could please clear the thumbs. And Sarah, also, if you could turn on the annotation tool, please. Here, if you could please place a sticker on the option you would select to upload your annual documents. Here, this is a little screen print of the file upload from RFS. Wonderful. We have some stars by the IPA, which is the Independent Public Accountant. Wonderful. Thank you, everyone, for putting a sticker there. And I will now turn it back over to Gail.
Thank you, Christy. So next we're going to discuss some loan reporting scenarios. One I will highlight is loan substitution, defective loans, the procedure, and the reporting in RFS. Steve will discuss loan purpose 3 or 4, previously modified loan reporting to Ginnie Mae to RFS, and then new pool data quality. Raise your hand if you had to submit a loan for substitution. I don't see any hands raised. So this, we will discuss what transpires. If you have a loan that is deemed defective, you refer to MBS Guide Chapter 14-8, Section D. A loan may be substituted with Ginnie Mae approval if it's identified as defective within the first 4 months of issue date of pooling. The replacement loan must satisfy all pool eligibility requirements. The issuer must submit a substitution request to the Ginnie Mae buyout at HUD.gov in accordance with the form letter or loan repurchase that may be found in Appendix 6-2. Once the approval is granted, the issuer must complete the substitution form with the new loan data. A unique loan ID will be generated for the substitution loan on or after the 25th of the month. That's a calendar day. And a defective loan should be removed, liquidated from RFS using removal code 5 substitution. I will turn this over to Steve, and he will discuss the modified loans.
Thanks, Gail. All right, now on this topic for modified loans, this refers to only the loans that are loan purpose 3 or 4. These are HAMP loans and non-HAMP loans, the modified HAMP and modified non-HAMP. Okay, so on this, we bring this up in the training so that you're aware of how you're reporting your loan purpose 3 and 4 loans. Okay, if you see in the table there are 5 fields that are affected by this this reporting, and you can see on the RFS loan record in Appendix VI-19, these are fields 7, 8, 9, 10, and 11. First payment date, loan maturity date, loan interest rate, loan OPB, and FIC, loan FIC. On all of those but the OPB, you are to report the modified value when you were reporting on your L record. So when you're reporting your first payment date, you're reporting the modified first payment date. When you're reporting your loan interest rate, it's the modified loan interest rate. The only original value that we want to see on your modified loan reporting is the loan OPB. You see it's the fourth one there in the L column, the original OPB. Okay, and so this is the correct reporting in RFS for those 5 fields. We see this enough that we said this has got to be a training slide so that we communicate the correct reporting to RFS. If you have any questions on modified loans, you can put that in the chat. I'm going to move on to data quality. So this topic is about Ginnie Mae looks at the data quality and changes from values reported at time of pooling. The loan to value, the CLTV, the annual MIP, first time home buyer indicator, these are all on the various loan record. What we see on some of these fields are changes from time of pooling to the monthly reporting on the V record. Sometimes there's a recalculation of a loan to value or a combined loan to value. The pooling system and the reporting system monthly should be in sync so that the same value is reported, unless it's a correction. If there's a legitimate correction to a value reported at time of pooling, that's where you would report on the various loan record. Now we do look at data quality, and we send out lists of loans that should be reviewed for data quality issues, and there's a phone number there. If you have data quality issues, you can contact that phone number or that email address there, Ginnie Mae Data Quality at Deloitte.com. Has anyone ever received, raise your hand if you've received an e-notification for new pools data quality? So it's one of the e-notifications that come out. We have about, I don't know, 40 email e-notes that go out every month for this. So don't be shy to raise your hand. This is just a compliance issue that Ginnie Mae wants to follow up with these loans to make sure that the data is correct. Okay. Very good. I will turn this over to Christy to talk about best practices. Thanks.
Thank you, Steve. This slide shows a list of best practices for issuers. Again, 100% of the pool and loan data must be reported by close of business on the second business day. All E and C level exceptions related to the pool and loan record must be cleared no later than 7 p.m. Eastern Time on the fourth business day. There should be consistency of data reported in RFS. The case number reported on the loan should match the case number reported at origination. Issuers are fully responsible for meeting reporting timelines and accuracy of data reported by subservicers. Adhering to your company's established cutoff date, ensure correct liquidation removal reason codes are reported in RFS, analyze and correct RFS exceptions per severity level requirements and deadlines. Review e-notifications daily, and as I mentioned earlier, have multiple backups for RSA tokens for the monthly certification. Sarah, could you please turn on the annotation tool? If you could please place a sticker on the best practice that you think is most important. Okay, great. Seeing some stickers. Wonderful, yes. I like all the check marks on the left because yes, they are all very important. So that is wonderful. Thank you, everyone. Sarah, would you please post our first polling question? Thank you. So our first polling question is, which screen do you use to complete the monthly report certification? Looks like everyone. Oh no, we've got somebody selecting B. Wonderful. I will go ahead and end the poll. Fabulous. It looks like everyone picks the correct answer, which is the RFS monthly summary screen. Thank you. Sarah, could you post the next question, please? When are annual financial documents due? I'll give it just a little bit longer. Okay, I'll go ahead and end the poll. And it looks like 71% of folks selected the correct answer, which is 90 days after your company's fiscal year end. Okay, and Sarah, if you could post the last polling question here before we take our break. Okay, and when does an issuer receive notice on terminated loans? Yeah, give a few more seconds where everyone can vote. And I will go ahead and end the poll. And it looks like 48% of folks selected the correct answer, which is the 10th business day. Thank you, Sarah. If you could end the polling. We will now take a 10-minute break and reconvene to continue training, which I will be presenting. Ryan, could you please start the 10-minute timer, and we will return at 11:10 a.m. Eastern Time. Thank you. Welcome back, everyone. I see that Lorna has posted a couple of questions in the chat. So her first question is there a scenario where Ginnie Mae does not allow substitutions on a defective loan, assuming the request is within the 4 months of issue date of the pool, and the replacement loan satisfies all pool eligibility requirements? John Kozak, if you are still on the line, would you like to discuss that now?
Sure. I don't think we would, assuming the loan that you're requesting to substitute for meets all the pooling parameters, and it's within that, I think, 4-month window time frame. I'm not sure why we would reject it. If you have a special situation, why don't you maybe email me after the training, and we can discuss the particulars if you have a specific situation.
Okay. Wonderful. Thank you, John. And then her second question is, when Steve was presenting the modified loans, the loan purpose grid, was that for the new reperforming pools introduced late last year for the new custom RG?
Sure. Thanks. That's a good question,
pool
Lorna.
Types. Steve, would you like to discuss that?
Recently, the RG pool is a new pool this year in Ginnie Mae, starting in, I believe, January or February of this year. And all the loans in an RG pool are loan purpose 5, which are reperforming. Now, not all loans that are reperforming are modified. Some are not. So Ginnie Mae is taking a look at the reporting scenarios for those. Currently, as in the presentation, the rules for reporting are for loan purpose 3 and 4. And as that adjusts for the loan purpose 5s in RFS, we'll communicate that to you through your rep or your account executive. Okay, thanks. That was a good question.
Thank you, Steve. And so now I also see a question from Don. Could we give an example of a defective loan? The first one that comes to my mind would be like if a loan is uninsurable, for whatever reason, FHA or VA or USDA would not insure the loan within the first 4 months from the pool issue date. That would be the first thing. John, if you would like to say anything else.
Yeah. That's it, Christy. The loan cannot be insured by FHA for some reason or another, or the loan doesn't fit pooling parameters. Okay, for example, maybe the loan is amortizing outside the parameters of the pool. Okay, and that's the only two criteria we have for approving the buyout of a defective loan.
Okay. And so would an example of that be like, John, if someone accidentally put a 30-year fixed rate loan into a 15-year fixed rate pool? But
Right,
okay.
right, exactly. Yeah.
Perfect.
Yeah.
Okay, well, great questions. Oh, and it looks like Dawn is typing. What if a loan was sold at the wrong and incorrect UPB?
No, that we would have to work with Christy and her group to try to make the changes. But if the loan is insured and fits the pool parameters, then that can't be bought out of the pool.
Okay, thank you so much, John. You are so very welcome, Dawn. Okay, if there are no other questions at this time, we will move on with cash and reconciliations. In this module, we will review cash, including cash on hand in the correct bank account, and ensure and how to update master agreements. Also, we will review reconciliations, explain how and when to submit CABs, discussing the reconciliation requirements, and review the pull to security and test of cash processes. Reconciliations of cash and P&I and T&I accounts. This consists of your bank account statements, your internal servicing records, and the information you have reported to Ginnie Mae for your monthly activity, which the totals are on the summary screen in RFS. Keys to quality monthly reporting for RFS are following the MBS Guide, Chapter 16 for custodial accounts, having Ginnie Mae program knowledge, reconciliations, test, and internal servicing controls. Cash management includes Ginnie Mae's access to draft funds from your account following Chapter 16 custodial account requirements, funding P&I shortfalls, completing monthly test of expected P&I recons, reconciling mortgage collateral to securities outstanding, which is also known as pull to security, and completing monthly bank account recons. Miscellaneous items would include, but are not limited to, payment clearing and disbursement clearing internal recons. Please give me a thumbs up if you perform the bank account recons. Okay, I'm seeing a few thumbs. Thank you very much. Sarah, if you could please clear the thumbs. It is very important that all Ginnie Mae issuers ensure they do not have any restrictions in place that would impact Ginnie Mae's ability to draft funds from the central P&I custodial account on draft days. Please ensure that the bank has not placed any ACH debit blocks. Also, issuers should have a procedure in place for communicating with Ginnie Mae and the Bank of New York Mellon, its central paying and transfer agent, or CPTA, if any problems arise. This includes available funds for guarantee fee drafts. Another best practice is 1 business day prior to the draft, confirm that the account is fully funded and there are not any holds or system limits. On the day of the scheduled draft, confirm funds have been swept from your designated account. If the draft has not occurred, contact your custodial bank directly. Also provide your Ginnie Mae account executive the plan to remedy the draft failure. As a homework question, do I have a volunteer to let me know if your company has a process to ensure that the ACH bank accounts are fully funded on the day of the draft? If so, please unmute yourself and share.
Good morning.
Hi,
It's
Lorraine.
Lorraine. We do have a process. Hi. We do have a process on site, and I'm very involved in that. It's my job to move the monies prior to draft date and to verify in the bank accounts that funds are available. And there's also a secondary line of defense in my department that deals specifically with bank account reconciliations. So there's a check and a balance on that.
That is great. Thank you so very much for sharing. Your collections clearing account or payment clearing is an optional account. This account may be used for Ginnie Mae and non-Ginnie Mae funds. This account needs to transfer to the Ginnie Mae P&I and TNI accounts within 1 business day. You may recover corporate advances provided excess funds are restored to the custodial account from this account. Also, this should be a 0 balance account, which means you should be able to show detail of every cent that is outstanding in this bank account each day. For liquidations, the clock starts when the post date of the deposit on the bank statement. Since issuers do not post payments received after hours until the next business day, they have 1 business day from the date of the post or the deposit. Ultimately, the funds must be deposited into the Ginnie Mae P&I account within 2 business days of receiving the funds. P&I custodial bank account requirements are as follows. Ginnie Mae funds only, a single non-interest-bearing custodial account, may contain funds for more than 1 pool, a HUD 11709 form must exist for each account, must be maintained at a financial institution capable of ACH, the bank recons must be completed timely, and it must meet the bank rating requirements per CAFS. Please raise your hand if you manage these accounts. So I'm not seeing any hand raise. So no one manages their P&I accounts? Okay. The P&I disbursement account requirements are as follows. You may use a separate disbursement account. It must be non-interest bearing, a 0 balance account, maintained at an ACH capable financial institution, must only be Ginnie Mae funds, only 1 Ginnie Mae issuer ID per account, and a HUD 11709 form must exist for each account. P&I accounts are subject to custodial account verification, also known as CAFS. which Gail talked about earlier before the break. It is not required if the aggregate P&I payments due from the borrower is less than $100,000 in any 1 month, as measured by the fixed installment per Appendix 6-19. Institutions serving as funds custodian must meet the following 2 requirements. Must be insured by the FDIC or NCUSIF, and must be rated as well capitalized by its federal or state regulator. Agency rating requirements state that the institution must have a rating that meets at least one of the following. Institutions serving as funds custodian with assets of $30 billion or more must have a short-term rating by S&P of A3 or better, a long-term by S&P of BBB or better, short-term bank deposit ratings by Moody's of P3 or better, or a long-term bank deposit rating by Moody's of Baa3 or better. Institutions with assets less than $30 billion must have an IDC rating of 125 or better, or a C+ or better by Kroll. CAVS is due between the 6th and 15th business day of March, June, September, and December. T&I custodial account requirements are as follows. Account must be interest-bearing. Funds must only be used by the issuer to pay charges paid and doable by the mortgager. Must be Ginnie Mae funds only. Must have a HUD 11720 form for each bank account. Bank account recons completed timely, which is 30 days from the issuer's cutoff date. Must be separate escrow custodial accounts for FHA 203K funds, separate escrow custodial account for buy-down funds, and separate escrow accounts for any funds per FHA, VA, RD, or PIH requirements. P&I temporary shortfalls could be caused by late payments from the mortgagors, NSF checks, and incorrect advance calculations. Non-recoverable corporate advances permanent shortfalls could be caused by SCRA, curtailment adjustments, loan payoffs, foreclosure liquidations, and T&I shortfalls. As our last homework question, do I have a volunteer that would like to share how their permanent shortfalls are funded? If so, please unmute yourself and share. Any shortfalls for Ginnie Mae 1 pulls are due to the custodial account prior to the 15th calendar day. For Ginnie Mae 2 pulls, any shortfalls are due to the custodial account prior to the 19th or 20th calendar day, depending on the ACH draft for the Ginnie Mae 2 pulls. Using the Annotation Tool, Sarah, if you could turn on the Annotation Tool, please. Could you please place a sticker on the method your company uses to fund P&I shortfalls if you know? Companies can use corporate advances, which are issuer funds, excess funds, which are unscheduled recoveries of principal on the pools, which may be found in MBS Guide Chapter 15-5, or the pool advance agreement, which use bank funds, which is in Appendix 6-1, must be completed. Okay, So it looks like pretty much everyone is using the corporate advances. Oh no, there's one using excess funds. Thank you so much for placing the stickers. So,
And Christy,
sure,
this
Steve.
is Steve. There is a question that has come into the group chat that may be related to one of the previous slides.
Oh, wonderful. Thank you, Steve. So Mindy, her question is there a separate account for lost draft funds? Actually, no, you do not have to have a separate escrow account for lost draft funds. Those can be commingled with your TNI funds in, just with your regular homeowners and tax and insurance account. Okay. So using your thumbs up, please let me know if you review your test of expected P&I. Test of expected P&I is required on every pool. It is performed by the issuer, provides monthly dollar amount in the P&I account, total of all pool cash shortages funded by the issuer, and may not net pools that have cash overages with pools that have cash shortages. A best practice would be to fund your P&I account for any positive differences in one transaction and retain the pool level documentation for audit purposes. Then withdraw funds from your P&I account for any negative differences in one transaction and retain the pool level documentation for audit purposes. Also, the test of expected calculation is only accurate if the pool to security recon is 0. Wonderful. I see a few thumbs. Thank you so much for sharing. Sarah, if you could please clear the thumbs. Here is a test of expected recon. Most servicing systems will complete a similar test of expected P&I recon like the one displayed. Using the thumbs up, could you let me know if you review your recon of mortgage collateral to securities outstanding or your pool to security recon? The pool to security recon is required on every pool and is performed by the issuer or your servicing system. If the pool is over collateralized, the adjusted pool principal balance is larger than the security balance, and you need to recover unscheduled principal from liquidations or curtailments. There is a $100 tolerance per pool if no unscheduled recoveries of principal. Under collateralized means the adjusted pool principal balance is less than the security balance, and you would need to remit principal, most likely by a corporate advance. There is a $1 per loan per pool tolerance with a maximum of $50 per pool. And thank you, everyone, for voting with the thumbs up. Sarah, if you could please clear the thumbs. Here is a pool to security recon. Most servicing systems will complete a similar pool to security recon report like the one displayed. We will now move on to the P&I recon. Here is a sample format of the P&I account recon. Most issuers build this form in Excel. Bank account recons must be completed within 30 days of the issuer's monthly reporting cutoff date for all accounts. The cash flow method is the balance at the end of the previous reporting month, plus the daily deposits minus disbursements, which equals the ending P&I cash book balance. This is reported in field 12 of the pool record and is displayed at the bottom of the pool screen. An important note, all adjusting items on the recon must be completely resolved and queried within one of the next 2 reporting cycles. If you have outstanding unreconciled items, this may result in an audit finding. And now for the T&I recon. Here is a sample format of the T&I account recon. Like the P&I recon, most issuers build this in Excel. Just like the P&I recon, the T&I bank account recons must be completed within 30 days of the issuer's monthly reporting cutoff date for all accounts. T&I funds are required to be deposited into the Ginnie Mae escrow account within 2 business days, which is 48 hours of pool settlement. The escrow balance for individual loans reported in field 29 of the loan record, and the escrow balance for all loans within the pool is reported in field 11 of the pool record. An important note, just like the P&I recon, all adjusting items on the recon must be completely resolved within one of the next 2 reporting cycles. Could you give me a thumbs up for yes and a thumbs down for no to indicate if you would ever report a loan without a T&I balance? Okay, I am actually not seeing any thumbs. So yes, most loans would have a T&I balance, but occasionally you might, have one that would not. Okay, thank you. I do see a few thumbs up. Thank you. The large red box on the pool activity screen shows where all of the bank account balances are reported on the pool level. These balances can be reported on the RFS file or entered manually online. Also, if you click the small plus sign in the bottom left-hand corner, the custodial bank information is displayed. This is where you would update any of your bank account numbers and the ABA numbers. The Save and Summarize Pool button at the bottom of the screen is in the red box, needs to be clicked when there is any information on this screen is updated, or if any loan level fields are updated as a certain loan level information is moved over to the pool behind the scenes. Please raise your hand if you use funds reported in these red boxes in the RFS Exception Feedback Summary screen in your bank recon. The T&I funds are rolled up of all of the T&I balances, and the other funds is a roll-up of all of the P&I and other balances from the pool screen. Okay, I'm seeing a few hands. Wonderful, thank you so much. Sarah, if you could please clear the hands. And I will now.
Thanks, Christy. All right, folks, we are in the home stretch here. We're going to do 3 polling questions here. And because you've hung in there with us throughout this training, we've reduced the number of answers down to 3. So Sarah, if you could post the first polling question, and everyone can vote now as to what is the time limit to complete your bank reconciliations. Let's get all 43 votes in here. All right, another few seconds here. Okay, we'll end that poll. Oops. There we go. The correct answer here, which I am broadcasting, is B, 30 days from cutoff. All right, let's go on to the next one. All right, you can start voting now as to when is an issuer required to submit CAVS information. All right, a few more votes are rolling in here. Okay, we'll end this poll and show you that C, when the FIC equals $100,000 or more, that is the correct answer. All right, and let's go on to the final poll question for the day. What is the purpose of the pool to security recon that Christy just talked about? Reconciliation of mortgage collateral to securities outstanding. I'll give you a hint on this one. The answer is not A.
That's a great tip, Steve.
All right, we'll end the poll here. The correct answer is B. Notifies the issuers of collateral to security discrepancies. All right, Sarah, you can close that poll. Okay, now we'll open this up for Q&A. If you have any, you can open your mic and ask the question audibly, or I see there is one question that's come in the chat. So this will be the time for questions. So please send those in. Cheryl asked, this might be off topic, but I want to know the purpose of the monthly transfer sheet found in e-notification. Okay. Gail, Christy, do either of you want to field that? The monthly transfer sheet e-notification.
Or John, if you could answer that for Ginnie Mae.
That's something I'm not familiar with, but I will look into it and try to follow up.
Thank you.
Hey, this is Nancy. Cheryl, Can you tell me which transfer sheet? There are two different transfer sheets. There are transfer sheets for pool transfers, and there are transfer sheets when the monthly certificate is transferred from one security holder to another security holder. Do you know which transfer sheet you're referring to?
Okay, Cheryl, thank you for that. Report shows if any certificate holders have been transferred or terminated.
Which could increase up to 5.25%. So the purpose of that is for the individual issuers that have to report the 11/7/14 for Ginnie Mae ones. That tells them when a previous security holder is now the ownership of the certificate has been transferred to a new security holder. These issuers are paying the security holders straight from the issuer's bank account. So they have to have the transfer information to maintain the security holder register and to pay the correct person.
Thank you, Nancy. Okay, another question here. In the past, we had access to GPads. Will it be available in the future? So GPads is one of the modules that you could have access to in the Ginnie Mae Enterprise portal, and if there's a module that is available but you don't have access to it, the best person to talk to would be your security officer for the Ginnie Mae Enterprise portal. That's a person in your organization who is in charge of providing access to the different modules within RFS.
I'll add something, Steve. I think I don't. GPads is kind of internal to Ginnie Mae. We sometimes the account executives will share various screens, but just GPads is kind of being phased out gradually at Ginnie Mae, so that system will be probably going away in the coming years. What issuers do have in RFS, I believe, is the issuer feedback report, which kind of gives some detail on how your portfolio compares with overall Ginnie Mae norms and peer groups. So I think that's much of the information that's contained in GPads.
Thank you, John. All right, we have one more question here. This is from Lorna. With the test of expected P&I, we always fund the shortages, but allow the surplus to exist if it is less than $1 per pool. Should we be bringing cash to zero with all of the pools, shortages, and surplus?
Hi, Steve. I'll take that one. Yes, actually, Lorna, you should be bringing everything to zero at least one time a year for the test of expected.
Thank you, Christy.
Mm-hmm. And also, if anyone has any questions, you're welcome to unmute yourself and we could actually discuss it.
All right, these are very good questions. Any others? Okay. So the contact information for Sylvia and the 3 trainers, Christy, Gail, and Steve, are on the screen there. Additionally, we have a link to the single family presentation, workflow document, Appendix VI 19, and the manually hard-coded loans at that link on the Ginnie Mae website. Under issuer training, you will be able to find information on that updated page. Okay. Finally, before we wrap up, in this presentation, there is a link for the 11710A form information, as well as the 11710E form information as a reference.